U.S. stocks rallied on Friday, rounding out a big end to the week. Bond yields retreated slightly from their recent upward trend. Economic activity in the services sector grew in February for the second consecutive month and exceeded expectations when the ISM Services figures suggested activity continues to expand at a reasonably healthy pace. The activity came after the Federal Reserve published a monetary policy report to Congress that details the central bank's plan to hike interest rates as the means to restore price stability. Officials indicated that ongoing Fed funds rate increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2%. But in my opinion, returning inflation to 2% is a pipe dream. I lived through the inflation of the 70s and the 80s, and it won't be solved with a few rate increases. Unfortunately, what's needed is sanity in the federal government, but from where I stand, it still looks like a clown show, and I don't approve of political jokes because I've seen too many get elected. And straight to the 2-year weekly chart of the volatility index. And as you can see in the upper left, the symbol is $VIX using stockcharts.com. Now, as you can see here, this upward trend got broken at this point right here. It broke down and the market rallied on the way up. But this breakdown looks like it's somewhat stubborn, doesn't want to go below this level here, which is around 18. In the lower portion here, you can take a look at the MAC, and you see that the fast line, which is in black, attempted to make it up and through the slow line there in red. It's getting reflected back, but it won't take very long for this to gain the steam to head up and through the slow line. Go back here in, say, mid-2021, and you can see similar formations here with the fast line attempting to move up. It got reflected back, down, and then it finally did move up, but it moved back down to the bottom side and then got reflected to the upside here. But as you see in the chart, it really didn't do a lot of damage to the level. The level, say, got up to around 24 to 26 for the most part in this range here. This is a bit different because we're starting from a higher base of around 18. So to get to that 26 is going to be relatively easy. I want to see something up here in the 34 to 36 range, but that will probably take a few months. But keep your eye on it. If the VIX decides to start moving on up, that means the market is going to move down. For now, it's relatively tame, but keep watching. Let's now go to our charts. Sticking with the 2-year weekly chart here, we're looking at the spiders, the SPY, and the close on Friday was 404.19. So now, we've talked about this channel here so many times. Let's just talk about this channel here, which is the new channel, basically running through like that with the upper trend line and the lower trend line running through like that. So now, as you see, it broke down through here, came and bottomed and based at that point, and it ran back on up here, making it through the 20 and the 50 EMAs, but it didn't take it through the top trend line. If we draw it that way, the old trend, it didn't make it through that, got reflected back down here to the bottom of the trend line. It started heading on up again, truncated at this point here, still not making it up to that top trend line, but it's come back down here, and it looks like it may want to bounce off of this bottom channel line and head on up. So we'll see where that goes. Let's take a look at the oscillators. Moving into volume, volume looks fine. And then into the MAC, you can see that that bottom and base here, which was higher, this bottom and base, and so the stock market headed on up. We had a top here, The fast line came back down here, had a reflection more or less off the slow line, and it headed back on up with another surge. It's looking for another reflection, but oftentimes you can count to 3 and that's all you get. So we've got 1, 2, and 3. So I would make a bet that this move will take it on up, but I think it may stall out. So we'll just have to watch that. It is gaining some strength above that 0 line, so I may be wrong. I'm wrong often. Moving here into the histogram, we can see the same thing. You can see the weakening in the histogram. This was higher. This was slightly lower. This is even lower. So let's see where this next move comes. I'm going to bet that it's even lower. All right, moving down here into the price rate of change. Now, this is important in the sense that the fast line has come through and down below the slow line. Bouncing off of that 0 line, it's going to sawtooth on up here, but I would imagine this is going to continue to sawtooth on its way down. I think that's what the probability is. I don't imagine it's going to go much lower than we had here, but I think it's going to sawtooth its way down here. And you can see that in some of these other oscillators, but not here in the RSI. The RSI is just at a moderate 55.66. It stayed within this range more or less between this channel line here, bounced off this 50, but I don't think it's going to have the steam to get up into that overbought territory, say above 80 to 100. I think it's going to meander in this area for a while. It might climb up a little bit higher than this top trend line. But one of the main things I'm looking at is the stochastics. Now, similar to the previous oscillator, we looked at a top here, it rolled over, but now the fast line is below the slow line, and I'm looking at what I call a backside spike, and this could sawtooth its way back up here. It might make it through, up and through the slow line if the slow line moves on down like that, but either way, it definitely shows a weakening in the formation. You can see that weakening here also in the Williams. Definitely we had that top at that point there, again slightly lower and then even lower, and this spike here, I would imagine it's going to head on up, but I kind of doubt it'll make it into that overbought territory, that negative 20 to 0. So if it does come up here, I'm looking for another topping at this point, more or less, and then perhaps another downward move below that negative 50 line. But that's a lot of speculation on my part. I've just seen these formations time and time again, and often that is what the path they'll follow. But it isn't necessarily guaranteed. Nothing is guaranteed. Certainly, inflation is not guaranteed, and federal funds rate increases are not guaranteed to stop inflation. So keep your eyes out and continue to be patient. Stack that cash. And for today, that's ChewDog Charts. Thank you.